This here is Phoenix, Arizona, a city where the housing market is collapsing as we speak. With prices spiraling and inventory piling up, everyone is wondering, is this where the big crash begins? With the Northeast still red hot and the Midwest relatively stable, the southern states have become a hotbed of speculation, with experts pointing to various cities as evidence of another housing bubble imploding. Just like Florida and Texas, Phoenix is emerging as another crash candidate. To truly understand this bizarre story happening today, you have to understand a bit of history. Back in January of 2000, Phoenix was starting its ascent and becoming one of the fastest growing cities in America. With that came the most concentrated real estate bubble we have ever seen. Everyone knows about the 2008 crash, but few people talk about the 2000s housing bubble, which of course was what led to that crash. The explosion in property values across the country was sort of led by Phoenix. Here, home prices exploded in a way that we had never seen before. From January of 2000 to July of 2006, the typical Phoenix home value rose 127%. This was unlike anything we had ever seen before in this country. That's an average of 14.6% per year, a figure that may not sound earth-shattering at first until you factor in the one thing that made this boom legendary: leverage. In real estate, 14% isn't just 14%. Most investors weren't paying in full. They were putting just 5% down, leveraging their positions 20 to 1. That means a $10,000 down payment could control a $200,000 property. And when prices rose 15%, that wasn't a 15% return. It was a 272% return on equity in a single year. And they weren't stopping at one. Many were scooping up 3, 4, or more properties fueled by easy credit, low rates, and a tidal wave of optimism. Turning 40K into 6 figures of equity annually wasn't a fantasy, it was happening everywhere here in the Phoenix metro. This wasn't just a housing boom, it was a wealth explosion driven by debt, FOMO, and the belief that the ride would never end. It was the golden era of buy now, ask questions never. Until, of course, the music stopped. And when it did, Phoenix alongside Vegas and Miami led the way in the great '08 real estate crash. Prices here dropped off a cliff. From July of 2006, predating the actual recession by over 1.5 years, to May of 2009, a typical Phoenix home dropped by 56%. This, I believe, is the worst major metro crash in US recorded history. You will not find a single case-shiller worse than this period right here. The Phoenix market, as an average, would take until November of 2020 to reach the highs of 2006, a brutal 14-year bear market. But enough about the past, let's talk about what's happening right now and why so many believe that this is happening again. The root of the problem, as always, is inventory. For years, the defining issue in the US housing market has been a severe lack of supply. This wasn't just a Phoenix phenomenon, it was a nationwide crisis. We entered an unprecedented era where bidding wars became the norm and homes normally drew dozens of offers the moment they hit the market. But that era is now ending. In Phoenix specifically, it's already over. We'll break that down in a moment, but even on a national level, the signs are clear. The days of extreme scarcity are fading fast. According to Altos Research, one of the most technical and reliable trackers of real-time housing data in the US, the latest inventory reading suggests a turning point is here. Take a listen to this quick clip, and then we'll continue to explain why Phoenix is leading this collapse.
Okay, let's switch to the supply side. There are now 719,000 single-family homes in on the market, unsold on the market. That's 32.5% greater than last year nationally. I'm going to show you which states are more, but in the long-term trend here, this is 10 years of inventory trends. You can see the pattern here at the last decade. Each year was generally fewer homes for sale. Between 2018 and 2019, 2018 was a year of rising mortgage rates. And incidentally, that was the year of the last Trump tariffs. And so it drove interest rates higher that year and the economy slowed. So as rates rose, inventory rose between 2018 and 2019. So we still have slightly fewer homes on the market than we did in 2018. So at that time was 813,000. We're at 791 right now. So we are almost past this era of of the pandemic crisis shortage of homes for sale. By the end of the year, we should be back to the old normal levels of homes for sale. That is now not evenly dispersed across the country. The rising inventory, so this is unsold homes on the market. So the way I describe this is like the supply of homes, if you think about it like a reservoir, the reservoir has been generally filling for 3 years. Mortgage rates have been rising, demand slows, and inventory rises. So that the reservoir has been filling back to the old normals from the very low drought during the pandemic.
So there you had Altos explain that essentially the national story is that inventory has normalized and will continue to grow over the next year, but one important thing is missed in that national readout. The fact is that this growth has been mostly led by the southern states, who have carried the majority of these so-called inventory gains. This has created massive disruptions to the market. For example, in Phoenix, the inventory situation is in a complete spiral. The active listing count has spiked to 18,701, which takes us back to 2017 numbers. If this continues to shoot up like it did in 2022, except this time from a higher baseline, the simple truth is that Phoenix prices simply cannot stay up. When you combine this line with the economic uncertainty that has plagued all markets, not just real estate, the result is clear. A scenario where prices fall slowly, then all at once is quite possible, and as inventory continues to build, the catalyst for an all-out crash becomes more and more likely. The weakness is already starting to show. Just take a look at this listing, which was covered by Reventure Consulting nearly 5 months ago. This home was bought during the absolute peak of the market in 2022 for $431,000. In the summer of 2024, the new owners attempted to sell it for $390,000. After 7 price changes, coming all the way down to $345,000, the home still couldn't sell after being on the market for nearly a year, and there's evidence that it could now be entering foreclosure. These types of listings are now common throughout the Phoenix area, and they put heavy weight on the market, pushing overall sentiment down. Let's not forget what happened here 15 years ago, and while history doesn't repeat exactly as before, it definitely rhymes. This has always been a boom and bust market, and this time around the inventory situation has everyone worried that something similar is developing as we speak. Thank you guys for watching. As always, please make sure you hit that like and subscribe button if you enjoyed it, and let me know what you're seeing on the ground, especially if you're from the Phoenix area.